for us to go ahead and get started, the first step that I want to introduce y'all to is being able to set up a wallet. So as you see on this website right here, Get Started Kit, this is a site I built out myself. I coded it from scratch to be a resource, not only for my students, but for the average person that might just want to get into crypto and don't have a starting place. So the first thing that we're gonna do is help y'all set up a wallet. The difference between this and a bank account is you own the keys to it, so you have the control of it. Now, when you look at being able to go withdraw or wire, 100,000 or 50,000, you got to get permission. You got to see if the bank actually has it liquid. Sometimes there's hold times or waiting times. Sometimes, things have to be approved. Sometimes you can't go do it when you want to because, the banks are only open from a certain time to a certain time. The beautiful thing about being able to move around in the crypto space is you have full control of your assets. Now, the only way that is possible is if you own the keys. How do you own the keys? I'm going to show y'all right now. So if you go up here to the top right, and if you were to go on mobile, it will be in the same area. You would click on Connect Wallet. Now, that's only for this website. It's plenty of other ways you can get to it, but I'm just showing y'all a simple way to create a new wallet. You would go to the top right, you would click Connect Wallet, and then you would choose from one of these wallets right here. So MetaMask is always a good start. I always tell everybody to start here because it's a standard, and this wallet is, more than likely compatible with just about any website that's crypto related. You would be using a MetaMask for the most part. So when you click on MetaMask, well, it's actually opening mine up, but if you didn't have one, you should see an option that says get, or you can hit right here, learn more. Now you can click get a wallet. When you click get a wallet, it's pulling up MetaMask in real time. All right, so you would click on agree to the MetaMask terms of use. And of course, I want you to go and read that, because in this space right here, being that you're the sole owner of your own private bank, of your own crypto assets, one thing to know is no one that you'll be able to call for customer service when you're dealing with decentralized platforms. Now you have centralized platforms, which we'll get into that a little later, but that would be your Coinbase, your crypto.com, anything that requires KYC, which is know your customer. And that's when they ask for your name, number, address, ID, verification through email, etc., etc. This is a little different because they don't ask you for any information. They don't ask you for an email. They don't ask you for any personal info. This is literally allowing you to set up your wallet without any outside interference, and this puts you completely in control. So when you start, you're going to click on create a new wallet. When you hit create a new wallet, all of this stuff is going to show up. Usually I just click on no thanks. You can read what it says, but it's just asking about being able to collect data on the behalf of MetaMask for improvements. So I'll click no thanks. They're going to ask me to create a password, 8 characters. I'm just going to make up a password, 1, 2, 3, 4, 5, 6, 7, 8. Of course, I suggest to put a password that, 1, you're going to remember or have written down, and then 2, know that you would not be able to make it back into the wallet without this password. Now, this is speaking in the sense of you've added the wallet to your phone or your browser and you need to get back into it. But the next step is going to show you how to set up a 12-word phrase. Now, this 12-word phrase is the actual master key to the wallet. This master key or phrase is the only way you would be able to get back into the wallet. If you were to lose your computer, if you were to lose your phone, if you were to lose all your devices that you might have had it logged in on and you needed to get back into it to move your assets or to access them, this master phrase is the end all be all. If you don't have this, you will not be able to email MetaMask as a company. It's no one you will be able to go to. You are completely in control. And just to be clear, MetaMask is not necessarily providing you with these 12 words. The software itself provides you with the 12 words automatically as you create a new wallet. So once they give you the 12 words and you write them down, they're going to have you confirm that you have them in the correct order. And then once you go through that confirmation, that's it. There will be no other opportunity for you to get those 12 words again unless you have them written down on the paper. Now, I will say, if you are logged into your wallet, you can get those 12 words again, but that only can happen from being inside of the wallet. So hence to the fact you still are going to need those 12 words regardless. Now this video right here, is simple. Now, before y'all get too far into the process, I didn't forget, but I meant to tell y'all one of the most important steps of this. Never, and when I say never, I mean ever, screenshot this 12-word phrase. I'm gonna give y'all a couple no-nos. Never screenshot it. Never take a picture of it. Don't try to copy and paste it and email it to yourself. Don't try to send it to yourself. Anything that you do with it digitally will make you vulnerable for possibly being hacked in the future. I've seen iClouds be hacked. I've seen computers get hacked. I've seen phones get hacked. I've seen people not even get hacked and still are vulnerable to people being able to get into their wallets. How do you prevent that? There's nothing to be scared of. How do you prevent that? Paper wallets. What's a paper wallet? A paper wallet is when you take this 12-word phrase and you write it on paper. You don't put it anywhere digital. That way, to yourself, you have took the right preventative measure to never make yourself vulnerable at the most basic level of protecting those 12 words. Okay? All right, great. So y'all following along good. Now, when it comes to dealing with NFTs, crypto, etc., you're gonna need your wallet. That's a must. That's the first step before you do anything. You're gonna need the wallet. Now, right here, right, I can hit remind me later, but you would hit secure my wallet to move forward because you want to do that to make sure that you got the phrase and to make sure that you confirm the phrase. Now, I don't suggest this, but this is what I'm doing just for the sake of moving forward and showing y'all everything is set. Once I hit done, install complete, I'm inside the wallet. Okay, cool. Now, this setup is going to be the same whether you're on the phone or computer. It's going to look the same. So just to show you guys what you're looking at, this right here where it says US dollar, this is your balance. And remember, when you're dealing with crypto, we're not dealing with US dollars. So I want you to know a Bitcoin is a Bitcoin is a Bitcoin. And Ethereum is an Ethereum is an Ethereum, meaning no matter where you go in the world, because this is a universal asset, no matter where you go in the world, one Ethereum will always be one Ethereum. One Bitcoin will always be one Bitcoin. One Litecoin will always be one Litecoin. One Dogecoin will always be one Dogecoin. Now, when we talking about having something to compare it to, then that's when we put it next to the US dollar. But I'm not paying back based on the US dollar. I'm only paying back based on the underlying asset. And these assets do fluctuate, right? Reason why we interact with things called stablecoins. And stablecoins are simply coins or tokens that remain at the value of $1 for the most part. Sometimes they fluctuate within the cents, but they're always going to be the value of $1 essentially. And the reason why those exist is for stabilization purposes, and so people can have some type of control of being able to navigate in and out of tokens that fluctuate, because everything in the crypto space fluctuates. Doesn't matter if it's a stable coin or not. It might be worth $1 and it might go down to 99 cent, 99.80. Is conceptually it's kind of crazy when you think about it, but this is the new money matrix that we're in right now. So this is, your balance for your portfolio. These are where your tokens are going to show up. If you have more tokens, they will show up here. And if you click on get started, it'll actually take you on a tour throughout the wallet. and navigate you around, show you where everything is. Now, when you go up here, you click on networks. This is going to allow you to switch the network that you're operating on with the crypto. Now, a simple way to think of this is kind of like, if this was a TV, these would be the different channels, right? But no matter what channel you're on, let's just say, I got a better example. If this was a car, these are the different types of gas that you can use. You have 87, 89, whatever. At the end of the day, it's still gas. So if I had Ethereum and I'm let's say this is 87, and I switch over to our we can switch over to linear for right now. Let's say I switch over to linear, right? I still have Ethereum. What is that? Gas. I still have gas, but now this gas is 89 instead of 87. So the same assets can live on multiple networks, but each network has a different set of rules. So when you're on each network, the fees, the transaction fees are going to be different depending on what network you use, because it's a different asset, it's a different medium, and they have different qualities about them. So for example, when you're operating on the Polygon network, it's still Ethereum, but it's a layer 2. So with it being a layer 2, it actually allows me to make the same transactions I would have made on the Ethereum network, but it lets me make them way cheaper. So it's going to cost me less money and the transaction to move way faster. Why is that? Because the Ethereum is the main chain, so it can get congested. I don't want to get too far into that right now, because I want to keep everything simple so we understand the overall reason why we're here and what we're using this stuff for. Now, we went through the wallet. You got the NFTs, and then you have the activity tab, which is just going to simply show you all of your transactions. Every transaction that you make on here is public. No matter what we've been told, is nothing anonymous about crypto. In fact, it's actually pseudo-anonymous. So when you're making transactions, just know that nothing is private. The only thing about it is this wallet right here, I didn't set it up with a name. I didn't set it up with an email. I didn't set it up with any information pertaining to me, right? So this is your identity right here. This long, and I'm actually gonna paste it so y'all can see what it looks like. This is my wallet address, right? My receive address, aka my public address. Think of a public address as like your Cash App name. So you can give anybody your Cash App name. That don't mean they can look in your wallet. That just means they can send you assets there, quote unquote money, right? The worst, I always make a joke, the worst thing someone can do with your public address is send you money. That's the worst thing they can do, is send you some money, right? Now there's other things that can be done. We'll get into that later. But your private address, because you have a public address and a private address. Your public address is fine to give out to people. Well, reset. Your public key, which is also your public address. Your private key, you give to no one. When I say no one, I mean no one. And to be clear, your private key is just as important as your master key, but your master key would be those 12 words that you wrote down, right? So your master key, aka seed phrase, also known as passphrase or secret recovery phrase, because it does have different names depending on the software that you use. All of those are private. You don't share that with anybody. That's sacred. Again, that's to be on paper, not to be shared with anyone. Imagine if this is, in comparison, this is you owning your own bank, right? Would you give someone the private master key to your own branch of a Wells Fargo? Let's say you own a branch of Wells Fargo and you put it on the street near your house, and you're not the manager, the owner of it, right? You're not going to give up that phrase. You're going to want to protect that with your life. You're going to guard that with everything in you, and you're going to want to be strategic on how you store the word. This is not something you just write in your notebook and just leave on the kitchen table and like, oh, you come back. Oh. because if you get to the point where, you know, you end up making you a nice bag, or, you know, you end up getting some Bitcoin or whatever you end up doing, and your assets shoot up, now you've put yourself in a position to where nothing's going to happen to it. You know what I'm saying? It's going to always be there. You just won't have access to it. And there's no one that can help you get back into it. The only thing that can save you is what? Can anybody drop it in the chat? What can save you in a situation like that? A
No,
paper master key, okay. Your paper wallet, your seed phrase. That's the only way. Meaning we are responsible. We have no one to blame. We have no one that can help us if we don't at least have that. That is the end all, be all when it comes to protecting your wallet and your assets, right? Now, let's get into the fun part of this, right? I'm going to show y'all some practical uses of things that could be done right now. So we're not just talking about, okay, we set up a wallet. Okay, well, I just buy some crypto. Like, it's deeper than that. I'm going to show y'all some of the cool things that can actually be done that I know most people don't speak of. One, because they don't know. And two, it's not the most popular thing to talk about right now. Most people just want to know, how do I make money? But this is bigger than that. So this platform right here is called Liquidium. Liquidium basically lets you borrow Bitcoin against your inscriptions, aka ordinals. Simple form, Bitcoin NFTs, NFTs that are going through the Bitcoin network. That's the simple way to explain it, right? Now, on here, as you see, total loan value. This is in real time. They have $318 million just sitting there to loan out. And it's sitting inside of a contract. No one controls it. TVL, that stands for total value locked. That means it's $8.3 million locked into this application right here. 8.3 million, meaning they have liquidity to cover anything that might go wrong. Interest paid, $5.6 million in interest paid out on loans directly from user-generated profiles. Total loans, they've done 63,000 loans. When we're talking about the validity of a platform like this is who it's backed by. Whether you're familiar with these companies or not, you should go check these companies out. These are all reputable companies, and they're not all just crypto companies. Some of these are tech companies and fintech companies. This platform right here in simple form lets you borrow. So I'm gonna show y'all an example of what that looks like. Launch app. Because again, we want to know, what can we do with this stuff? Like, am I just buying it and sitting on it and holding it? Well, you can come in here and you can do lending or borrowing. Now, from the lending side, which is a lot safer in my opinion, if you just want to play it safe, you can literally find these assets, which are considered blue chip assets, which are assets that are recognized to be, you know, I would say valuable in the eyes of people that are willing to lend and borrow, valuable in the eyes of people that spend money in the crypto space, valuable just as far as proof of concept of being, you know, worth something. So when you hear the word blue chip, most times you're going to see blue chip projects on a site like this. So right here, let's say I want to be a lender. Let's say I want a Bitcoin puppet, right? And a Bitcoin puppet costs 0.12 BTC, right? So that comes out to $13,344. And that's the floor price. Floor price is just the lowest amount that people are willing to pay for it. So when you hit lend, you're going to be able to sign in with your wallet and make them an offer. Now you see right there, APY 150%, term 5 days, floor price. So let's say I wanted, most people do terms for 5 days. I haven't really seen terms for 10 and 16 days, but it's whatever you choose to do. So I can hit, and mind you, I have to be signed into my wallet to do this, to actually make it confirm. That's why it says connect. But I hit 5 days. I can hit match best. And these are the different terms that I can go by. So, let's say I go by this term, it would, check to see if I have enough BTC in my wallet. It says insufficient because I'm not signing to my wallet. Right there where it says connect, I would be confirming. I would sign with my wallet as long as I have that amount of, well, not even this amount. Really it'll be based on what I'm loaning them. So that'll be $114 in interest. So for this NFT, they can get $114 right now, instant liquidity from any one of us that's willing to lend. So when I hit lend, it's going to make the offer and it's up to them to accept it. Now, when I do this, I'm doing this for anyone that has a Bitcoin puppet. It's not specifically for one person. By me putting it out there, anybody that has a Bitcoin puppet can go to the borrow section, right? And when you go to the borrow section, I go to the same asset. So I can go to the same asset and hit borrow. Now, me as the borrower, I'm someone who has a Bitcoin puppet. So what does that mean? I'm signing to my wallet that's holding a Bitcoin puppet. I would hit borrow, and then I would just simply choose from the amount of offers that's already out there, right? Remember, this is a public ledger, so I can accept the offer from anybody that has an offer out there. I don't have to know who they are. My credit history doesn't matter. None of that stuff matters because we're decentralized. Now, as you see, this is pretty hot NFT. All of these people are putting in offers right now, so I can accept any one of these offers right now. And then this shows the active loans and how much time is left. Now, mind you, it's a collateral thing. So if I give you a loan on your puppet and you don't pay within those 5 days, the escrow is going to automatically transfer that to my wallet. And then, it's no risk for you. The only risk you had was you put your asset up for collateral. So if you lose the asset, you did get the loan against it. So it's an even swap, no swindle, right? So when I speak about this and the importance of this in liquidity, being able to put yourself in position to have assets that's worth borrowing is no different from buying real estate, from buying cars, from purchasing cars to put on Turo. It's basically just accumulating assets and then being able to put them to work. So that's what this platform does in simple form. We're gonna go on to the next one. Now, this platform does the same exact thing, but this is for Ethereum-based assets. And I'm gonna tell y'all a short story. I had a piece of land in the metaverse that I got for about $5,600, right? I put it on this platform, not knowing too much about it, just trying things. And I didn't really pay attention like I needed to, and I came back too late. I ended up losing that piece of land for $5,600. But mind you, I was able to borrow, I can't even remember how much I borrowed at the time, but I was able to borrow a nice amount of money against it. And I had to just take that as a loss. Now, credit scores are already on the blockchain. They do exist. So this platform actually it's a credit score tied to your wallet. You start off with a perfect credit score. Once you start defaulting on loans, that makes your credit score go down. The more that you pay loans off, like you take loans, you pay them off, that boosts your score, that makes you more reputable, that makes people more willing to lend to you, et cetera, et cetera. Mind you, we're talking about instant liquidity against digital assets that people say are imaginary and we can't do anything with and we don't have any value. Brings me to my other point. Hold on, before I even get into this, it's similar to the other two platforms I showed y'all, but this is different. This allows you to basically create secure loans against your crypto coins. So not necessarily your NFTs or your ordinals, but your actual coins. So your Bitcoin, your Ethereum, your TRX, all these different coins, you're actually able to borrow against those tokens using this this platform right here. So as you see, total value locked, they have 6,300,000,600,000 total value locked. Grants power, $100,000. Ecosystem user, 400,000. Now, mind y'all are so early that it's less than 1 million people on here using this, and we have millions of people in the world. Less than 1 million people. It's 400,000 using this. Let me hit launch app. Now you'll need a different wallet to use this. For this, you'll have to use like Tron Link or X Link or one of those wallets. But again, this is going to allow you to create loans against your token. So as you see these tokens right here, every token that you see up here, you can supply the token or you can borrow against the token. So right now, you could borrow up to about, I think 60 or 70% of what you put up. Now there is another platform called Instadap that allows you to borrow up to 97% of what you put up. But basically, you're able to lock your tokens into a smart contract. That smart contract is going to be, you're going to be yielding and earning based off of it sitting there. The APYs are right here. So you'll be able to choose which one makes the most sense. But when you think about sending your money in the bank, there's no way you're going to get 10% with your money sitting in the bank. You know what I mean? You're not going to get not even a whole 1% if we're going to be real. I think it's like 0.04, you know. But this is the power of crypto, and this all can be done now. So it don't matter if you're starting with $20 or if you got 20,000, if you got 20 million. I would say this is definitely one of the safer ways to start, and you can literally start earning on your crypto just sitting there, because you know most times it's going to be just sitting there anyway if you're just getting started. So when we're talking about liquidity, well, how are they able to do this? Well, they have 12 billion TRX already sitting there in liquidity, 127 million USD, which is, this is a stable coin. This is equal to US dollar. So we're talking about being able to take a coin that doesn't even fluctuate, right? And you get 8.55% on it, plus you're mining tokens. So you're earning tokens on top of you getting paid interest, right? In my opinion, if I knew this when I first came into crypto, this would have been my route I would have been going anyway, you know, outside of just investing in NFTs and trading and just trying stuff. But, you know, what I'm here to do is break down that barrier entry and simplify it for y'all, because I know most people are scared, you know, of crypto. They've seen people lose money. They've lost money in this, and it's discouraging. But I'm here to tell y'all, as long as you playing everything fundamentally right, you know, it's a game of trial and error, and you can really win in this space just by taking safe preventative measures and actually doing things that's going to help you beat out inflation in the long run, right? Because when we look at the US dollar from 2020 until now, we've lost, I want to say 25% of purchasing power. So that same dollar is worth 75 cents today as far as goods and services that you're able to actually buy with it, because it's a loss of purchasing power. So you always want to make sure you put yourself in position to have something that can beat out inflation in the long run, right? So we went over Liquidium, we went over NFTfi, we just went over JustLend. Before we get out of here, that's extremely important, right? This site that I gave y'all, Get Started Kit, when you go to this site, it's a tab here that says current market, right? When you click on current market, right here, what we have is a current market dashboard. Now, this is a software I developed myself in order to have something to always know what the market is doing. So you know how originally when I used to do my classes, I used to have, I don't know, maybe 8 to 10 tabs up to do all of these things that you see right here on the site, right? So I developed this software for me to be able to get multiple things done at once. And that is being able to check the market out. So I get a quick assessment of what these assets are doing in the market. I have a heat map. So as I scroll over the heat map, simple form, when you see it red, that means it's losing liquidity or it's going down. When you see it green, that means it's up. So you know, it might flip. You might see Ethereum red, which is losing, and then you see Bitcoin up. Now we just topped out at like an all-time high of about 99,000 this week, right? Now, as you see, we're losing liquidity inside of Bitcoin, which is making the price go down. Now, some people say, oh, it's crashing, but I can't really call something that was at its highest level, about 69,000 a few weeks ago, crashing when it just came down to 92,000, right? And that's because I look at it from a zoomed out perspective. Now, also, if you do know how to read charts, and if you don't, that's fine. I teach technical analysis. I teach people how to read charts for stocks, gold, oil, crypto, options, etc., etc. If you want to know what your asset is doing, all you have to do is come to the top left and type it in. So let's say I want to see what Ethereum is doing. I'll type in ETH, US dollar, and now I can see what ETH is doing. What is Litecoin doing? Let me type it in. I type in Litecoin, and now I can see what Litecoin is doing. The whole purpose of this dashboard is to simplify your process and workflow for being able to go through these coins and see what they're doing right now in the very moment. Not what the news is saying, not what they're saying on Twitter, not what they're saying on Instagram, but what's going on right now in this very moment, right? When you go below here, I have a swap built into it that allows you to swap assets cross-chain, meaning if I want to go from an Ethereum asset on Ethereum chain to an asset on Bitcoin chain, is almost impossible if you don't have what they call a bridge, which is going to charge you a certain fee, right? So this swap right here is a workaround for getting around the bridges and actually helps you save money on your swaps. You know, I want to make this transition for y'all as simple as possible. Now, this swap right here does not require you to sign into anything. Why is that? Because it's going to be a peer-to-peer transaction. Now, the cool thing about this swap is it goes through Simple Swap. So Simple Swap has customer service. So as long as you keep up with your transaction number, I think that's the correct term for it, you'll be able to email the support if a swap doesn't go right or if you don't receive your tokens. But still make sure you do your due diligence when dealing with anything in the space, not just this one thing, but you know, anything in the space. These videos I update often. Right here you have the welcome, you have the update video. On every tab of my website, I have, you know, 2 videos there. Periodically check those. I'll be updating those. And then right up under here, I added in basically this section to keep up with assets. Now, let's say, you know, quick search purposes, let's say I want to see, you know, what token is, I would say, let's say what token has the lowest price. I'm going to flip it upside down, right? So what that's going to do is it's going to give me the tokens in order from the lowest up to the highest. So that gives me opportunity to see what tokens can I buy for less than a penny. Because remember, if Bitcoin is at 100,000, it has to go to 200,000 for you to double your money, which is also what? 100% return. But you can make a lot more money off of tokens that are a lot cheaper. Mind you, you still want to do your research on these tokens, but you know, you're able to check the metrics of them from right here. Now, the less amount of tokens that something has is actually good for the people holding the token because the price goes up faster. And there's other factors to look at as well, but that's, you know, one thing to look at. So when you look at Shiba Inu, it has 589 trillion tokens. Not saying I would or wouldn't buy Shiba, but looking at those metrics, that's something I know is going to take me some time to make my money unless I got into it early. Now, when you look at something like this, right, it's only 35. Hold on, it's only 36,000 tokens. But also another metric you can go by is change, right? So now I can see what are the biggest losers. Okay, these lost the most amount of money today. So if they have any chance of coming back, I'm in a good position to be in profit if I do scoop up a certain amount of them and I can actually ride it back up to wherever it's going, right? If I want to look at traded volume for the day, I can see what has the most money going through it. Well, that's Tether, and then hold on, my bad. Hold on. So that's Tether, which had 191 billion going through it, and then it's Bitcoin with 79 billion going through it. So when people try to talk to me about crypto, I don't go by the news. I don't go by what people say. I don't go by influencers. I don't care if, they've managed hedge funds. I don't care if they're, Warren Buffett. I don't care who they are, because all I look at is the actual data. Not saying no one can tell me anything, but if we're both going by the data, I could just read the data myself. So one thing I always encourage is read the data yourself. Don't even just go by what I say. That's why I built this software out, so we can go by what the data says. So I could be here just talking my head off and be like, man, Bitcoin 98,000, da 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 da. Well, in this very moment, it's at 92,000. It's not at 98,000. It's not at 99,000. We're going by where it's at in the very moment right now. So, like, for example, right, 0.1 Bitcoin is $9,597. You see how it just changed in real time? That's how this works. That's why we never speak in US dollars. Coinbase convert. Okay. So this is one of the ways you can always do a comparison of the value anytime you just want to know what my US dollars are equal. So I could put, let's say I want to buy Bitcoin. I'm like, how much Bitcoin should I buy, or how much Bitcoin should I send? And I say, hey man, I had $10,000. $10,000 is equal to 0.102, et cetera, BTC, right? But in simple form, 0.1, because the more you go down into the lower numbers, the more specific you get when you're talking about, what it equals to on the other side. So if I change this to a 3, that changes it completely. Every decimal, every number matters. This is all mathematics. So let's take a different asset.
Can you use a smaller number? That's a question that I get often when people are like, well, I want to buy some Bitcoin. What if I can't buy a whole Bitcoin? So I just have like $50. How much of a
Right.
Bitcoin does $50 get me? Just so the people that are just buying fragments of the coin, because I will put the emphasis on it doesn't matter how much you can buy. If you can buy $20, $30 here, certainly just get the digital asset of Bitcoin.
Correct. So 50 US dollars currently right now is equal to 0.000513, etc. Right. So this is what's important. These numbers right here behind the decimal, because if I put a mistake and put a 1 right there, that changes the value back to US dollars of $147. So what we want to look at with Bitcoin is something that's very important is percentage, right? So if I put, let's say, all right, so the current price of BTC, one BTC is equal to 97,000, right? And some change. In order for me to double my money, right? BTC has to make a 100% return, meaning it has to double. So this number right here, the 97,000, has to double. Now, again, $50. So let me show you how we get priced out fast over the years. If $50 gets you this much BTC, right? We're going to go back in time and we're going to see how much BTC was. Let me put this on. I guess we can do about a month. All right, so reset chart. Take all this stuff off so we can see what we're looking at. Now we're gonna look at the bottom. The bottom is what's important because we can go back and look at exact days and times. So at this point in time, BTC, this was January 1st, 2012, on a Sunday. At this time, BTC was $5. If we go here, BTC was like 30 something dollars. We go up to this point. This is when it's crossing into like $600-700. So let's just say, for example, right here. Let's stop right there. $12. So you can get a whole Bitcoin for $12 back in the day, right? Let's do some math. So the same thing I was looking at right here, 0.0005 BTC, right? If one Bitcoin was $12 and I wanted this much BTC, let's see how much that would have cost back then. So, but see this, okay. Watch this. This how crazy the internet is. How much was worth January 1st, was that 2012? That was 2012.
Yes, 2012.
Okay. $1, 2012 was worth. Oh no, that's something else. All right, so the value of this much Bitcoin in 2012 was equal to. Hold on, estimate we can average that Bitcoin price. So Bitcoin was at 890. 2012. So less than 1 penny. That's what it was equal to back then in US dollars. This same exact denomination that we're trying to buy right now for $50. So the way we get priced out of things is we let time go by, the asset goes up. The same amount you could have purchased at that time, or shoot, $8.90 would have got you a whole Bitcoin. Just to keep it simple, right? Now, you know what's interesting about that? There are tokens, there's plenty of tokens right now that are less than a penny. So, and this is not financial advice, but in any type of way, I'm not a financial advisor. Please take everything I say with a grain of salt. Speaking from my opinion and my research. But if we were to take this same approach with tokens right now that are, at this same, in this same range, and I'm gonna show y'all how to find those tokens, you would be in a better position to make higher percentage gains. And I'm gonna show y'all. So, okay, cool. We just seen with BTC, but as y'all see, this chart is, going over the years. Now, most time when we hear about it, we always, like, if I put this on the daily chart, right? When we see this, we're like, oh, it's crashing, it's going down. But if I zoom out, because this is how life is. You know how, like, you get into a car accident, or you take a loss or something bad happens, you're like, oh, my life is over. That's where you are, like, right here. Not knowing, all of this is going to happen. We're just kind of like zoomed in. When you're zoomed in, you really can't see what's going on. That's why they have the different time slots on the chart. So you can take this same chart. Now, mind you, when I'm showing you this is all the same chart. It's no different. This is the monthly chart, right? Now, if I go down, it's the same chart, but now it's on the weekly. Same chart, now it's on the daily. Same chart, now it's on the 4-hour. Same chart, now we're on the 2-hour. Same chart, now we're on the 15-minute. It's the same exact chart, but depending on what time frame you're looking at it at, that is going to determine what you see in the current moment. And most people only see, hey, never have FOMO. No matter what's going on, keep a level head. All right. So FOMO will make you buy into something because everybody's talking about it. And now you're disappointed because it went down, not knowing that you still was winning getting it at 60,000 because we had 100,000 right now. Right. So you got to kind of have foresight and just know that, it's good. Like, the whole reason, you got to look at the reasoning of why Bitcoin goes up. One of the main reasons is there's only 21 million of them. It will never be any more. It's not like money where we can just wake up and print it. Due to that, it is a scarce asset, just like gold. So Bitcoin is going up because everybody in the world is racing to get it because it's only so much. And then we got to take into consideration that a lot of people have already lost access. So they can't get back into their wallets. They've lost access to the wallets. They've, lost passwords, et cetera, et cetera. So a lot of Bitcoin just can't be moved. It's not going anywhere. Like I said, no one can take it from you, but that's why it's important that we have control of our phrases, because if we don't, then you don't lose your Bitcoin when you don't use it. It just stays there. It doesn't go anywhere. So think about how many people lost access. When you think about that, it's not as much Bitcoin as people think that's actually available. But yeah, it's a scarce asset at the end of the day. And with knowing that not every crypto is as scarce as Bitcoin. Not every crypto is scarce. Just to be real. I mean, no, you can't make any more, but it's a lot of different nuances. Like, let's say we have a supply of 100 million tokens, but it's only 10,000 tokens in circulation. Now you might see the price going up, but the price could very well drop too once they let the once they release more allocation of higher allocations of the token in circulation. It's a lot of factors, and I want y'all to write this down because I'm gonna give y'all some of the main factors to look at. These are the things that you want to look at when we're looking at coins, right? So you have market capitalization, which is also known as market cap. And with market cap, that's the total numbers of the coins. That'll be the price times the circulating supply. It's an actual formula. So you can get the market cap yourself by taking the price and the circulating supply and multiplying them times each other, right? Higher market caps usually means it's more stability because it's more liquidity, put into the coin. Now, when you see a market cap low, and everybody's low is different, but like in my opinion, like less than $1 million is low. Even a couple $1 million is low. Even under $1 billion is low in the crypto space, and that's another main difference between this and the stock market. Stock market is safe money, it's old money, it's traditional money, right? So people get excited off of 2 to 3% gains. Ooh, 2 to 3%. If you got a couple $1 million, 2 to 3% is decent. But think about the crypto spaces. We get hundreds of percents, we get thousands of percents, we get tens of thousands of percents within minutes, within days, within hours, within weeks, within months, right? But within a day, I mean, just me trading, I could do 8%, I could do 15%, I could do 25%. So crypto allows you to be able to take smaller amounts of capital and you can grow it a lot quicker than you would in the stock market, right? The stock market would have to go ballistic for you to get 400% in one day. And it's funny that this is from Forbes, right? Because I'm gonna show y'all something that a lot of people didn't catch about Forbes website as of recently. Y'all see what they say at the top? Connect wallet. Now I posted this like months ago, and like it kind of like went over people's head. It was like, okay, like what does that mean? Look at this. Secure a Forbes Web3 membership today. Listen, I got a video from like 2019 telling people that, hey, in order to really come up off of cryptocurrency, we want to front run institutions and we want to front run nations, because right now it's two things going on. We have whole nations, El Salvador, Brazil, all these different countries and nations literally racing and building Bitcoin reserves as a form of stability to hedge against inflation and other things, right? And you got that going on, but then at the same time, you have BlackRock, you have MicroStrategy, you have the Warren Buffetts and all the, JP Morgans and all the people who told you, hey, crypto's a scam, don't do it, don't touch it. All of these same people are telling you, hey, you better get some before you're priced out, But you know why they didn't say anything about it until now is because they weren't in position. So we've always had the upper hand from the beginning. That's why I don't listen to media about anything dealing with crypto, because they're always late, and I can prove that time after time. I have that proven already. Um, Usually there's a agenda behind anything that they're saying. You got price manipulation, you got FOMO. If you ever heard the phrase, buy the rumor, sell the news, all of that, it plays into that, right? Now let me go back because I want to just read a little bit of this article. I'm not going to read the whole thing for the sake of time, but check this out. So Bitcoin blockchain used to secure election results in Georgia County. Scraven County, hopefully I'm saying that right. Scraven County, Georgia made history on November 5th, 2000. That's the same day of the election. Oh, my stomach hurt reading this. Oh, okay. Made history November 5th, 2024, when it became the first county in the United States to use the Bitcoin blockchain to safeguard the results of its elections. The Screven County Board of Elections worked with Simple Proof, a U.S. company that protects digital records by using the Bitcoin blockchain to ensure their election results couldn't be altered. I'm not even gonna read past that. Y'all can check that out later, but that's so important because even though they went through a company to do it, they used the company almost as like an advisor or like someone that they can trust to make sure everything goes through. But as far as the data, all the data was handled through the blockchain. Like they could tell me whatever, but I could just literally go on the blockchain and read the data. That's why, again, I don't go by what the news tell me, because they also tried to tell me, and it's just, I'm big on fundamentals. Once we learn the fundamentals, we can't be bamboozled, and we don't have to. Y'all don't even have to listen to what I say. I tell y'all that all the time. You don't even have to go by what I say once you know the fundamentals. But you can go on chain and just look the data up. It doesn't matter what anybody tells you, because the thing about blockchain is it can't be altered. It's permanent. Every transaction that happens copies the transaction before and every transaction that happened before that. So, for example, if I make a transaction right now, every transaction that happened years before this copies with that transaction over to the next transaction. So if you try to change anything within the transaction, it's actually going to change a hash in the code, and it's not going to let you move forward. So that's what makes it a trustless system, because you don't actually have to trust it, because it is what it is. Blockchain is like DNA. That's the simplest way I can explain it. And I'm gonna leave that at that, because I don't want to go too far in the rabbit hole. We're gonna bring it back to the whole reason why we're here, which is the fundamentals of it and being able to identify good assets to invest into and why we invest into those assets. So I'm gonna go back to my list, right, of the criteria that we have when we're looking at these coins. Something else that we want to look at is trading volume, right? And that would consist of the daily trading activity. Higher volume suggests better liquidity. Low volume can indicate difficulty.
Not sharing your screen if you're sharing. We're
Oh, it's
still
not.
seeing it. Not yet.
Oh no, you know what? I haven't. Is it? Can y'all see me scrolling? Okay, yeah, I haven't done
Yes.
anything on screen. My bad about that, y'all. I was uh, I was reading the list off to y'all. So the other thing that we want to look at is utility and use case, and we all know what utility means. But if it solves a real world problem, is there any adoption or implementation, and is there any competition in the current market? Something I always like to look at is uh high demand, low competition, right? So if you have something like our XRP, for example, XRP actually has a lot of competition, but XRP was able to get all of the corporate backing, and it's held up by a lot of it has a lot of backing behind it, governmental, et cetera, right? So when you're looking at XRP, everybody has their opinions, but I would consider it a safe investment if we're looking at it long term. For anybody who's in here like, man, I just want to make some money, the best thing I can tell you is learn technical analysis so you can make short-term moves that make sense. But if you don't know technical analysis, then I would take the route of investing in assets that I would consider good long-term investments, things that make sense for actual infrastructure in the world. Just like when you look at the stock market, you know, I could say, hey, I want to invest into this company that's dealing with real estate. But then when you look at, okay, what's the company, like for example, Nvidia, right? The reason why Nvidia is so valuable because they're making the processors, the chips, the things that go into the computer. So I can invest in Apple, I can invest in Microsoft, but what what uh what technology is actually going inside the computers, and how scarce is that? What company is producing the steel? What company is producing the wood for the homes? What company is, dealing with the water and the sewage and all? Like, those are the things you want to think about when we just going past surface level investments, right? Eco-friendly investments, et cetera, et cetera. You just want to make sure that, if you're going long term, this is something that you want to, park your capital in. And I ain't gonna say not look at it, but be confident in knowing no matter how much it fluctuates, I can leave it here for years to come. Because that's all people did with Bitcoin. I mean, I'm pretty sure y'all seen the video of the guy who was begging people to buy it at 12 cents or $12 or whatever. And he's still online today doing his thing. But it's and that's how a lot of the XRP people are. Like, I mean, like, I tell y'all right now, I don't hold any XRP. It might sound crazy, but I'm not interested in XRP at all. Does it mean it's a bad investment? No. Does it mean it's a good investment? No. It just means I'm not personally interested in it. I have my own portfolio. I have my own things that I like. I got a lot of people that made a lot of money off of XRP. Do I feel like I missed out? No, because I got things that they don't have. And that's why this is important to never get FOMO and know what you're doing and why. As long as you have your why, you really can't lose if you know why. That's why I always say don't invest anything that you're not willing to lose. We don't go into this expecting to lose anything, but this little $10 I would have spent on a latte, or this little $50 I would have spent on going out to eat or whatever. I mean, like, you can't get it back after you eat it. So why not invest it? I seen something that was talking about iPhones. If you had every iPhone since the year whatever, you spent this much. If you would have spent that same amount in the Apple stock, you would actually be up way more. And that's a fact. That's not even speculation. So some other things to look at with investing is, the development team. And I don't want to get too far into that, but just doing your due diligence on who's behind the projects. Have they done any other projects? What's their history? What's their track record? Are they doxed, et cetera, et cetera? Those are other important things to look at, especially when you're talking about parking your capital. I'm pretty sure nobody in here wants to make investments that are just too risky, right? So that's something to always look at. And also it's a site called GitHub, GITHUB. You can actually go look at their GitHub and see what other projects they already have put out, and if they have any open source projects. Something else to look at is their code available online for anybody to see. Has their code been audited? Has there been an audit behind the code of the coin or of the blockchain that you're dealing with? Because without an audit, that's one of the things that I would consider a red flag. If it hasn't been audited, I'm not gonna say I'm not gonna put my money in there, but it's gonna make me very hesitant about putting my money into that, right? Tokenomics, total supply and distribution, inflation versus deflation rate, vesting schedules for team and investors. Tokenomics are very important. That's just the way basically the rules around how the token is distributed, and the functionality of it, and how many tokens are available, and allocation, the team allocation. So, like, for example, uh what I would consider bad tokenomics is like if 50% of the supply is owned by the people who made the coin, because at any point in time they can pull, and it's like a pyramid scheme. Everybody at the bottom loses, you know. So always make sure you're looking into the tokenomics. And something else to look at is, partnerships and adoption. Do they have quality partnerships? What is the quality of the partnerships? What's the nature of their relationship? Their user growth metrics. What else? What else? Do they have integration with other platforms? Something that always gives me a little bit of security is seeing that they already have integrations with certain companies or certain websites. That shows that they have a little bit of skin in the game, or they already have those relationships, and that someone is accountable, right? And that also goes back to what I was talking about earlier, as far as like utility and the development team. Um, what else? What else? Something else to look at is security. And I don't expect y'all to just know that off top. We can go over that another day, but security. And a lot of that has to do with the development team. That's why I say, it's important to see if they've been doxxed, who's behind it. Something that you always want to look at is who are the developers. Like, yeah, it's cool that Mark Cuban owns it, or this person owns it, or that person owns it, but who are the developers? Okay, let's say ATL dev team, right? Okay, it's ATL dev team. What other projects have they done? And do they have any type of blemishes? Have they been involved in any rug pulls? Are they ex Google developers? Are they, did they come from another company? Are they running from something? All of that matters, when we're talking about, again, investing our capital into, just like I say with stocks, we're investing into companies because these coins are companies. They have marketing teams, they have budgets, they have lawyers, they have all the same things that a company attached to a stock would have. So, we would pay attention to all the same things we would pay attention to with stocks, but it's a little bit more due diligence on this side. And it's ways of doing that to make that easy. But and that's why the audits are important. Let's say I was looking for something to invest into. I don't want to invest into, something that is up. Like, all of this is up. This did 1,000%. I'm not putting my money in that right now. This did 500. Like, no, we're gonna flip this upside down. Who took the biggest losses? Oh, you see what I'm saying? So now I see opportunity. The more red I see is the more opportunity I see. All of this is opportunity. So if it was to go back to where it was, that's almost a 100% return. That's almost me doubling my money, right? And some of these tokens I'm familiar with. A lot of these I don't know, which is a great thing. Because this is another way you can discover coins. Now, let's say, in my brain, in my mind, if I'm just in a rush and I'm just looking, I'm gonna show y'all how I would do this in real time. So, like, let's say I come here, I'm gonna start off here, whoop, do the change. Now I want to go by available coins. I want to go by not who has the most coins, but who has the least coins, right? So, as you see, this this right here only has 8 million coins. That means I have a greater upside, because remember, Bitcoin is 21 million. This has 8 million. Anything in the millions, numbers pretty usually move fast. When we're talking about growth, right? And we're talking about, well, I made a mistake. We're gonna look at total coins first. Then we want to look at available coins to the total coins. So a good scenario that I would consider out of this list, I'm gonna show you. And this without me looking at anything else. I'm just gonna look at total coins and available coins. Wait, I just seen it. Wait. Okay, this is not a bad number right here. And I'm familiar with ARWeave. So 66 million total coins, 65 million available coins. So that sounds to me like the rest of them are um either allocated to the team or they are locked up. And that would be TVL, total volume lock, or total lock volume. I always mix that up. And that's something else to look at. TVL, total value locked, or total. I always mix that up, but however much is locked in there at total is that's more like a safety net to let you know that it's less likely to be rug pulled and you're in a safer situation. And remember, this is the wild west. Nothing is absolute, nothing is exact. But by taking these measures and paying attention, we put ourselves in a good position. Now, something else to look at, ARWeave. You see the price of this? This is $22 per token. That's beautiful, because imagine had I would have bought ARWeave when it was at 1 cent. which is what we're looking at. How to find gems while they're below a penny. How to find gems when they're below $1. The name of the game is accumulation. How many tokens can you accumulate before the price goes up? I'm not gonna say that's all that matters because that's irresponsible, but that's one of the most important things. If I would have just accumulated a bunch of Bitcoins back then when the price went up, I'm in profit. Now, in order to get a whole Bitcoin, you got to spend over $100,000, right? It's crazy. But I mean, oh, y'all just made me think. Watch this. So market cap. Remember, we discussed market cap. We're gonna go back up here. So highest market cap from top to bottom. Look at this list. Bitcoin, Ethereum, Tether, which is stablecoin, XRP, Solana, Binance, Dogecoin, USDC, Cardano, Tron, right? Now, what's interesting about this list is, you see this? This is most of the crypto market is in Bitcoin, right? Ethereum. Now I'm gonna show y'all what's man, I was just discussing this with my homie the other day, and a lot of us didn't know. Like this went over my head. Like I don't know why this went over my head years ago, but when you look at Ethereum, Ethereum is $3,700 per token currently, right? It was just at 4,000 the other day. Now, what's interesting about that is the market cap is what, 448 billion. Okay. The price is 3,700. So that's per token. You could have got, when I first started investing in Ethereum, it was like what, $500? No, it was less than $500 a coin, about $300 or something like that, right? Now, total coins, it's only 120 million. Y'all see that ratio? That goes back to that ratio I was talking about. That's why that token is up so much, because again, it's scarce. Yes, 21 million Bitcoin. It's less Bitcoin than it is Ethereum. Y'all see that, right? Y'all see that, right? It's 21 million Bitcoin, 120 million Ethereum. It's 100 billion XRP. And the reason why it's so much XRP, because this is supposed to be, used with banks. So you got to have a lot more available, but it's going to be what it's going to be. Solana is less than $1 billion. Anything less than $1 billion is a win in my book, to be honest, when we're talking about total coins, right? And then look at the ratio of how many is available versus the total. That's a good ratio in my opinion right there, right? $500 million. That's not even, well, a little bit over $500 million. That's not even out yet. I mean, I wouldn't call that a bad ratio. I just have to see how things play out. Now, all of this is for today as well. This is going off daily. So when we're looking at volume, remember we spoke about volume. That's how much has went through there just today. Over $100 billion has went through Bitcoin just today. Over 55 billion Ethereum just today. 263 million billion Tether just today. $18 billion worth of volume XRP just today. This whole list, nothing says a million, right? So when people try to tell me, oh, crypto's dead, NFTs are dead, this is dead, again, I don't want to hear what they got to say. I'm going to pull the numbers up and I'm going to look at the numbers. They tried to tell me that NFTs were dead because of Bored Ape Yacht Club and this and that. And it's like, okay, that's one NFT project. If I pull up the NFT market right now, I can show you billions of dollars that's been flowing through there every single day since that news came out years ago about NFTs being 99% down. That's why language is important, because when these people go talking, they don't be knowing what they're talking about. And I don't want to call any names. A lot of them are popular. A lot of us look up to these guys, but they don't be knowing what they're talking about. And I don't blame them because they just don't know. And that's, it is what it is. But Dogecoin, would I put my money in Dogecoin? No. But does it have the potential to go crazy? Yes. Look, I'm going to show y'all something right now. So it is 147 billion tokens, right? 147 billion available. So we don't have to worry about that ratio issue. 11 billion went through it today and it's actually down 11%, which means you can actually make a play on Dogecoin and that'd be a decent play. Price right now, 41 cents. Now, we're going to revisit this video a year from now. Look at these prices. 41 cents right now. Just like we were looking at Bitcoin, just like we were looking at everything else. Solana, I remember when Solana was like $30. Like Solana is literally what's the price of Solana right now? $217, right? Binance, which is an exchange. Remember, it's important to know the whole reason why people even putting money into the coin. So, Solana, I look at Solana like I look at Solana like Vegas. We call it our little joke for it is it's the casino. We call it Vegas, right? But it does have a lot of like good technology and great partnerships and a great reason why it is where it's at. XRP, that's tied into the bank's governmental things, and it has a lot of institutional backing behind it. Dogecoin is simply a meme coin, but now they're actually finding ways to give it utility by having some type of integration with it, with the government, et cetera, right? Um, Community is a big thing. So the bigger the community you have, you could take a meme coin that has no value and it can become valuable just by the community that's supporting it, right? Um, Tron. I literally have videos where some of my first students they got in on Tron at the price of 2 cents. Right now, Tron is at 26 cents, which is still a great price for Tron, and it's down 17% from where it just was. I just put up a video the other day. It was at like 42 cents. Um, so that's almost like 100% return once it goes back to. If it was to go to 50 cents right now, or 51 cents, that would be 100% return, right? That's just something to keep in mind. How many tokens do they have? 86 billion. And it's deflationary, meaning the price is going to go up over time because of the tokenomics. The tokenomics are set, they burn tokens a lot. And to burn tokens just basically means to take it out of existence. When you burn tokens, it makes the actual price go up because there's less tokens available. So when you have less tokens available, but you still have capital, you still have market cap, all of those things, the price actually goes up. Shiba. A lot of people talk about Shiba. Look, Shiba has 589 trillion tokens, which is absurd to me, but it's doing what it does. And look at the price of it. It's way under a penny right now. Uh, I mean, I could go all day. This one recently just went super crazy. Hedera market cap is 10 billion. And it's got a lot going on. It's pretty dope. Um, this is down 15% today. Now I'm gonna show y'all something. What do y'all see right here? Is there anything that stands out to y'all when y'all see this?
Bitcoin is down, so the other coins are down too.
Right. Well, that's part of it, but the overall market, right? Like when I see this, I see opportunity. The darker reds are the ones that took bigger hits.
They're on
And then
clearance sale.
huh?
They're on clearance sale.
Everything is on clearance. That's what I wanted to hear somebody say. Everything is on clearance. I see opportunity, nothing but opportunity. On days where all of this is green, yeah, I'm just parking my car and chilling. Like, um, there's a lot of money to be made in the market, whether it goes up or down. You feel me? And I don't want to get into all the different ways right now. We get into that next time, but some of the ways that we trade. I might have out collateral. So, like, let's say for example, I was borrowing Ethereum, while it was at 4,000. Now I just back down at 3,700. I could pay back a whole Ethereum, and now I'm in profit $300. You see what I'm saying? So it's a lot of opportunity to make money when the market is down, which I'm trading. I'm collateralizing NFTs. It's so many different ways to profit from the market being down. Now we're talking about when the market is going up, you're in profit automatically if you invest into not certain coins. When you invest in the coins and it goes up, you're automatically in profit. There's nothing to really do. So like when let's say you have like 6 Ethereum. If it was to go up a smidget, if it was just to go back up $300, you're in profit across the board on all of them. So you don't have to worry about, what should I do? Once we start talking about taking profit and things of that sort, that gets more into the software of using the wallets and knowing how to go in there and exchange, because you can make a lot of money, but if you don't know how to pull it out or how to take profit, then you're at a loss at the end of the day. So what I would say is we take everything that we learned today and you want to apply that to your research process and have a process of knowing why. Like, look at this. Monero, it's down 20%. It was just at like 200 some dollars.